And I can say, all right, if I go into my sales, I can go into my customers again, and then I go into my customer number one, and customer number one is returning the merchandise or whatever, right? We're like, okay, fine, whatever, dude. And so we could then go into the plus button up top possibly, and go into we could try to do the credit memo. Again, that would create a negative receivable, but no, we're going to give them the money back because refund the receipt. We just want to get this guy, this person is not worth it. They're just crazy. It's just best just to pay them to go away because the merchandise was fine. I don't even know what their problem is. It's like, but whatever, we'll probably get sued. We're in California. We can't, we'll get sued or something. So we're just going to say whatever. Payment method, we'll say, we'll just say it's cash. And then refund from, again, we can choose the checking account, or we can choose, undeposited funds. We're going to make it to the checking account, and it's going to be a check number. I'm not going to have a check number because I'm going to say it's electronic. And then we're going to say that the product is going to be, what was it? Inventory item number 1. So inventory item number 1, tax is applied. Once again, it's calculating the $8, but it's not adding it. So the total should be, you would think, the $108. Let's record it and then go back into it so this will populate properly. Let's go ahead and save and close. And then I'm going to say, okay, refund, customer name, amount, okay, boom. And then let's go back into it. Here's the sales receipt. Let's edit it so we can see it, and it's properly calculating down here at the 108. So what does this form do? Well, it's a sales receipt form, which is a credit memo. It's a cross between a credit memo and like an expense or check form, meaning it's a form that's going to decrease, the checking account, like a check form, similar to like a bill payment form, which is a specialized kind of check form, or a payroll tax check form, or payroll check form. So it's a check form that has a specific thing that it is doing rather than just paying for an expense, right? And then the rest of it is going to be basically like a credit memo, in that it's going to be reversing the cash. So cash is going down now for the 108 because they already paid us. The other side is going to be going to revenue, which is the questionable item for the 100, because we're decreasing the revenue account, which we don't typically like to do, but we'll talk about that more later. And then the difference of $8 is decreasing the sales tax payable. And then we're putting the inventory back on the books at $70, driven by the item, which knows because we're using a perpetual inventory system, and we're decreasing cost of goods sold. So the net impact on net income is 100 minus the cost of goods sold impact of 70. All right, so let's save it and close it. So there we have that. And now you can see then these two have been recorded. So here's the sales receipt. We had already been paid on the sales receipt. So when I go into it, we already have the payment. And then of course we have up here the refund that is nice and tracked within the customer center. So let's go back to the balance sheet now and just check it out. So I can go into the checking, I run it. Let's go into the checking out the checking. It went up by 108 for the sale that we made, and then we made a refund of the 108 for the full amount. Let's go back. The other side's on the income statement, running it to refresh it. And now we see that the sale of product goes back down. If I go into it, I can see that it went up with the sales receipt, down with the refund. Let's go back. We can also see the difference between the 100 and 108, the $8 on the balance sheet, which is the sales tax payable in the Board of Equalization payable, because that's who we pay in California here. Horrible play. I don't even know what they do with the money. I don't even want to know. You don't even want to know. It's crazy how much taxes we pay here, and they don't do nothing. We just had a bunch of fires. I think they could have. Anyway, we don't even have any water. They have fires, no water. How much taxes are we? It's ridiculous, man. What's going on around here? Anyway, the inventory. So I go into the inventory. We've got then the sales receipt and it goes back up again for the $70. Let's go back. And then in the profit and loss, we can see that the cost of goods sold, let's go into that. And so we had the expense and then we reversed it. So there is that. Looks good. We can also see in the subledger, if I run the subledger, inventory's back on the books for the $10 units now. So inventory is now at the $1,296.25, which should tie out to what's on the balance sheet. Balance sheet of inventory $1,296.25.